Good afternoon from Los Angeles and welcome to Stock Market Today, sponsored by Interactive Brokers. On today's show, we're going to be taking a look at the charts of Nike, Cintas, as well as Twitter. Some interesting action there. But first, let's take a look at the major indexes. It's Alyssa Corum here with Ken Shreve. And Ken, a very interesting day today. We're going to dig a little deeper, but the NASDAQ did close up over 1%. The Dow up about 0.7%. Same with the S&P 500. After spending a little bit of time in the earlier hours of the session in negative territory, but reversing higher on some headlines. It's still a very headline-driven market.
Still a headline-driven market. You know, we turned lower after the telephone call transcripts between President Trump and Ukraine's president was released, and we held losses for a little while. And the market turned higher when President Trump at the UN said that a trade deal with China could come sooner than expected, and we turned higher then, and then held gains throughout the session. And like you said, the Nasdaq ended with a gain of more than 1%. We had a pretty sharp distribution day for the market on Tuesday, so volume was pretty heavy Tuesday. So the gains today came in lower volume, but a 1% gain for the Nasdaq, back above the 50-day moving average. I think overall the market's technical picture still looks pretty good here as indexes hold near highs. Yeah, that's right. Seeing the Nasdaq climb back above that 50-day moving average so quickly after a pretty bearish day yesterday, I think is somewhat positive, even though you did mention the lighter volume. So we'll have to see where it goes from here. But in the meantime, let's take a look at some individual stocks, starting off with Nike, which was able to post a gain of about 4% today, a gap up for the stock after issuing its quarterly earnings report. We had strong growth here out of China, up about 27%. E-commerce growth also strong, coming in at about 42%. The women's business doing well, and this move for Nike came in heavy volume. Yeah, and it's interesting to see these apparel makers, retailers talking about all these investments in e-commerce that they're making, and Nike is not immune to that. Lululemon's been doing the same thing. So, good earnings report from Nike. Sales in North America might have been a little bit light, but there was plenty more good news than bad news in the earnings report. Nice gap up over an 89.45 buy point. We can see the stock ended near its low for the day, still a 4% gain. J-Bill showed similar action yesterday when it broke out, kind of closed near its session low, but it followed through powerfully today. So good day for Nike, and good solid earnings report, and it was the strongest gainer in the Dow today. Yeah, and it was Nike's strongest bottom line growth in quite a few quarters here, that 28% number, and that came after a few rocky quarters for earnings. So that is always good to see the fundamentals improving there. But now let's take a look at Cintas today. Why is Cintas on your radar, Ken? Well, they reported earnings, and this is sort of a boring business. They make uniforms they're a uniform maker basically, but they have a pretty good dividend yield, and this is a stock that's working on a base. So the earnings were pretty good. It actually, you can see the daily chart here is a bullish gap above the 50-day moving average, closed near highs. So this one is actually pretty close to a 270.46 buy point. Again, with the we're still in a confirmed uptrend. I know the bears are starting to come out from the woodwork, but you still want to pay attention to stocks showing strength and building good bases. The track record for breakouts has not been great in recent weeks, but Cintas is a breakout candidate, especially with a nice gap above the 50-day moving average today. That's right. It's now trading just about 1% below a potential buy point, and our pattern recognition actually does not show this base on a daily chart. Yeah, just another reason why it's
it's important to also make sure you're checking out those weekly charts as well, especially on MarketSmith if you are using pattern recognition.
Yeah, and this is a stock also with a composite rating of 97, so it does have a lot of positive qualities. You're not getting high double-digit earnings and sales growth, but you do have a company with a consistent track record of earnings and sales, good dividend, and bullish chart at this point.
Yeah, that's right. And last but not least, we want to check in on Twitter. A nice technical move here today for the stock, which gained over 2% today, almost 3% actually, finding support at its 50-day moving average after closing just below that level in Tuesday's session.
Yeah, so the stock came down to its 50-day moving average Tuesday in pretty heavy volume, closed near its session low. It looked like Twitter was going to give up support. So good to see Twitter finding support, but this chart looks a lot like the indexes. You had heavy volume decline on Tuesday, followed up by a lower volume gain today. So it is what support at the 50-day looks like, but you always want to see volume when a stock finds support.
Sure.
And sort of a low volume day for the market, low volume day for Twitter, but it's finding support so far.
Yeah, and it is holding those gains since that breakout on earnings not too long ago from that cup with handle. So it's kind of been hovering, sideways within the buy range a little bit, but good to see support here today.
Well, there's no question there's a lot of broken stock charts out there, a lot of software stocks that are broken, that have, breached their 50-day moving average, a lot of them ready to form new bases. Twitter is not a broken stock. It's still, like you said, holding above that 41.02 buy point, finding support in the early going at its 50-day moving average. So we have to give this one the benefit of the doubt so far.
All right, sounds good. Thanks as always for your insights, Ken. And thank you guys for watching. Before we go, just want to remind you that we do have a new episode of our Investing Strategies show out now. You can head to investors.com/investing strategies for that. Justin Nielsen joined me on the show this week, and we talked about IBD's ETF trading tactics. So that was great. And also spoke to Adobe about their data strategy. And, we've been talking about Adobe for a long time. It's just one of those stocks with a very steady track record of growth.
Yeah, I mean, it's we've given a lot of coverage to Adobe in recent years because they're just a really well-run company that does nothing but execute. So
all right, well, make sure to check that interview out. And then also we will be having a new episode of the Investing with IBD podcast dropping tomorrow. We have a new episode out every Thursday, so make sure you go to investors.com/podcast to subscribe on your listening platform of choice now in anticipation of that episode dropping tomorrow. All right, everyone, thanks again for joining us, and we'll see you right back here tomorrow.